Investors very focused right now on the impact of a global slowdown in growth. I sat down with the governor of the Bank of Japan, Haruhiko Kuroda, one of the most powerful central bankers in the world, and started by asking him for his straight-up outlook for the Japanese economy. Listen.
I think the Japanese economy has also slightly slowed down, partly because of Japan's exports to China has become somewhat weak, particularly IT-related goods and capital goods. So because of that, Japan's production also has become weak.
You've been very focused on the inflation target, prioritized that for the last few years, but inflation has still remained subdued. Why is that?
Two factors. One, despite the very good corporate profit levels, and also despite the very strong labor market situation, I mean, unemployment rate is only 2.3%, which is even in Japanese context full employment. And yet wages are rising somewhat modestly. That is one factor. Another factor is in the last 5-6 years, labor productivity increase in Japan was the highest among G7 countries, higher than in the United States, higher than in Germany. So wage costs certainly rose, but because of labor productivity increase, corporations can manage without raising prices.
I did see that Amazon is raising prices in Japan for the first time since it's been there. That must be some sort of good sign for you. Did you see that?
So I think, particularly in the service sector, restaurant, hotels, they are raising prices because they are quite labor intensive. And labor-intensive sectors finally raising prices. So it takes more time than we thought before, because we introduced the current extremely accommodative monetary policy in April 2013.
6 years.
6 years. And yet, of course, when we introduced that monetary policy, inflation rate was minus 0.5%. It's now 1%.
So it's worked?
Yeah.
We
have to be patient.
Yeah. I mean, it raises the question, though, that if we do, global economy face a steeper decline or downturn or even recession, whether central banks, especially yours, has the policy ammunition to fight it.
Yeah, of course, since our policy rate is minus 0.1%, and the 10-year JGB rate is around 0%. But still, we can further reduce interest rate.
How negative can you go?
Japan's negative interest rate is just minus 0.1%. And as you may know, in Europe, they have minus 0.5% or minus 0.75% or something. I'm not saying that we would do that, but still there is room for reducing long-term interest rate as well as short-term interest rate. And also there are other ways to make monetary conditions more accommodative, expansionary through larger asset sales, asset purchase program, and so on and so forth. So I think there are still some room for further monetary easing.
If you need.
Yeah, if needed. But at this stage, we don't think it's necessary.
Do you worry at all about the longer-term implications and the side effects of having so much accommodation for so long?
I think a major side effect is its impact on the profitability of the banking sector, because banks can make profit through the interest rate gap.
It's crushing them.
Yeah, it's almost nothing.
Are you surprised at the value of the dollar yen, given how much easing you've done relative to the Fed's normalization and where the 10-year yield is versus the U.S. 10-year yield? I mean, the Japanese yen hasn't weakened that substantially.
Before we introduced the quantitative and qualitative monetary easing in 2013, yen was overvalued. And in the last 5-6 years, yen stabilized around 110 to 120 or something, which is not undervaluation. Rather, I should say, excessive appreciation or overvaluation was corrected. And the exchange rate has been quite stable now, despite...
So you're satisfied?
Yeah.